Are you a gamer? Are you planning to buy a new car, SUV or a MUV perhaps? Well, we have some bad news for you. The GST Council meeting was held yesterday and it brought significant changes in the taxation for the gaming industry and for the auto industry. 28%. Bets placed on online games, casinos and horse racing will face a GST of 28%. The council increased the cess on SUVs and MUVs by 200 basis points. However, all is not bad. There is a relief for cinema goers. Hello and welcome. I am Pallavi Sharma and you are watching Money Wise with ET Now. It was the 50th GST Council meeting yesterday and many decisions were announced by Finance Minister Nirmala Sitharaman in a press conference after the meeting. In this video, we decode the fine print and tell you what it means for you and what changes for you after this.
Online gaming, horse racing and casinos will be taxed. They will be taxed at 28%.
Foods and beverages that one consumes in the cinema halls, it shall be 5%.
Let's first understand what were the key highlights of the meet. First, the 28% tax on bets placed on online games, casinos and horse racing. Second, the definition of utility vehicles was clarified in the meeting. Third, food and beverages served in cinema halls will now charge only 5% GST versus 18% earlier. Fourth, import of cancer medicine and other medicines for curing rare diseases are now exempt from GST, while it attracted 12% IGST earlier. Let's talk about the impact now. Online gaming tax has come to the spotlight as soon as it was announced. Industry experts are not very happy with the 28% GST. Well, for you, it means that all games, be it skill-based or not, including fantasy leagues, attract a 28% GST. For casinos, the amount you pay for the chips will attract 28% GST and bets placed on horse racing too. So if you spend 100 rupees on a game, you will have to pay 28 rupees as GST. Currently, online betting and gambling attract 28% GST, while other games attract an 18% levy on gross gaming revenue. The change will come into effect after amendment in GST law. The All India Gaming Federation, representing top gaming companies, called it an unconstitutional and irrational decision. They say that it will wipe out the entire Indian gaming industry and lead to lakhs of job losses. BharatPe co-founder Ashneer Grover also slammed the government's decision in a tweet and said that it will kill the gaming industry. Remember, the online gaming industry in India is now not only an entertainment for people, but it is also generating millions of jobs in the country. And at the end of 2022, Indian gaming industry or the market stood at $2.6 billion. It is expected to grow at 27% CAGR and it's expected to reach at $8.6 billion by 2027. But the impact of the raise in GST is not all good. The stock of Delta Corp has fallen over 20% and Nazara Tech fell nearly 5% after the announcement was made. Nazara Tech said that the 28% GST will have a minimal impact on its overall revenue, as skill-based real money gaming contributed only 5.2% to its overall revenue. Coming to the auto industry, well, for the customers, you have to pay 2% more to buy an SUV or MUV. Sedan has not been added to the list of utility vehicles yet. The cess on utility vehicles has been increased from current 20% to 22%. Nearly 3 SUVs have been launched in this month in India, and the retail auto sales have also gone up by 10% year on year in June 2023. But all is not bad. If you like binging in cinema halls, your food and beverages will get cheaper. The council announced that the cinema halls will now charge only 5% GST on food and beverages, while it was 18% earlier. Multiplexes have welcomed the move and said that it will help the revival of theatre business post-pandemic. So when in all, the finance minister says that it is not game over for the gaming industry, but the industry says that it will bring significant challenges and also affect its cash flow. However, both the auto industry and multiplexes have welcomed the decision by the council.
If you like this video, then like, share and subscribe to ET Now.